everybody, and welcome. This is Mark Newton. Today is the 31st of August, final day of the month, and for many, getting close to the end of the unofficial end of summer. So I hope everybody has enjoyed a very happy, fun summertime, and are trying to manage this market the best you can. I do appreciate your patronage and support as always. And as a reminder, for those that are new, I'm going to talk about what you want me to talk about. And so for those that really want to have, questions answered, a lot of this is going to focus just on stocks for the time being that I'm going to talk about for the next 45 minutes or the next hour. And to do that, you really want to go to the FSInsight website and go into technical strategy, and you can upvote your picks. And so those with the most votes are going to get my attention today. Of course, as it turns out, a lot of these do tend to repeat, and I'm going to try to avoid concentrating too much on a lot of the different tech stocks and energy stocks that really all have the same patterns. And so I'm going to do it a little bit of a different format today. And I want to leave some time at the end because I do want to talk about some cycles that I'm seeing, and also we'll look at some DeMark patterns. And then finally, I'll touch a little bit on cryptocurrencies and also some sector rotation because I think that would be helpful. I am going to be coming out with a stock list of my top longs and shorts coming out, not right away, but I'm going to save the suspense until that's out. And so we're not going to be talking about today any of the high conviction names that I like, but more just concentrating on more of the methodology and the style of what I'm seeing. And we'll talk about S&P for a couple minutes, only because we've managed to give back now more than 50% of the advance off the June 16 lows. And many that, realize that we peaked out, right near 43.28. That was almost exactly where this downtrend from January hit the prior peak from late March. Many know this date was important for quite a few reasons. It marked right around a Fibonacci 38.2% time retracement of the entire move down from January into June. When you look at the dates coming up, we are faced with a very important anniversary of last September's peak. We fell about 6% from September and October, and this would also be a 100% time retracement of the entire move from March down through June. So that hits really the 1st of September. And interestingly enough, that also is when a couple of the other cycle composites show the potential for markets to stage a little bit of a rally. And this is let's just go ahead and we'll start to go by some of the picks and just do this one by one. And initially that's S&P, so we can see that, we are thinking that, markets likely can bottom out in the next couple of days. I'm looking at price and time analysis. So this area here, right near 39.20 to 39.25, is going to be important from a time perspective heading into the next couple of days into end of week. And so I think that although 39.81 is breached, that doesn't mean that we have to go down and test new lows. And if anything, there's a good likelihood still that we can bottom out and turn higher. And that's based on price and time confluence. And I will spare you, the exact reasons for now. I'll try to talk about that a little bit more in detail. But for now, let's just go on to the cues. We see that similar to S&P, we've given back right around 50% of the prior decline. This should likely start to bottom out here, move higher over the next couple of weeks, and then we're going to have a seasonal correction into October. So the Qs, I expect, might have a brief undercut of yesterday's lows, which were at 298, but the area near 290, 295 should be an excellent time to really consider buying dips. And, if anything, one wants to really consider that similar to the S&P, we're going to bottom out and rally over the next couple of weeks. I don't think there's an immediate pullback to new lows. The reasons for that, of course, are cycles are based on sentiment, and they're based on the fact that breadth and momentum were so strong off the July lows that I think it's going to be difficult to reach that right away. Nvidia, now this is going to present some decent opportunity, I think, to buy dips after what I felt was a 5-wave advance off the lows, and what has been in the meantime a big ABC pattern that should not get down under these lows of 140. So it's at 151. We've pulled back from near 190 already, 193 almost. This likely is going to be a great chance to buy this stock in the next couple of days, in my view. I think that semis are going to stabilize and start to turn higher, and I think Nvidia is going to be something to buy. Now, the first key area on the upside is going to be 167. That's the prior swing low. Getting back up above that would allow for a larger move. For the time being, I'm happy to play for a move from, say, 145 down to 140, buying there in the next couple of days. Even if it's buying here, it makes sense. I think we'll at least get up to challenge at least some of the peaks from late August. And my thinking is this is really going to be a necessity to really break out above 193 to have traction of a larger move. That might not be feasible right away, but I do think that in October, any dips need to be bought, and that should materialize. Tesla, so it's been sort of a lackluster type pullback here, and very similar to the stocks, you see that you have really a little ABC pattern. So I think what could happen is that Tesla actually starts to bottom and turns higher into mid-September. I don't mind buying it here. I know it looks like a head and shoulders. I don't think that's the case. If anything, in the next day or two, this is simply a corrective type pattern and likely is going to bottom out before we get down under 265 and turn up to really challenge these highs. At that time, one might want to take steps to try to reduce risk, but for the time being, this does look like it should be bottoming, not continue down. Apple, similar situation here. It's tough to see the market truly rebounding until Apple can bottom out, given just its weights within S&P and the Qs. We got ample evidence of the market trying to turn, right back here on August, really the 18th, 19th. This is when this very symmetrical uptrend line was broken. You notice that, hitting this resistance right near the top of the consolidation proved to be very important. And always, it's worth it to try to extend support and resistance lines out so you can get a better feel for when stocks have the potential of peaking. Momentum turned negative. This has been on a downward spiral. I don't see much chance of Apple getting down really under right now. It's at a 38.2 Fibonacci retracement of the entire move up, which is right near 158. I'm not even sure if it gets down to this 153 level. I like buying Apple here. I think it has pulled back. Momentum is almost now down to near-term oversold territory. So as you can guess by my comments, I am a buyer of a lot of the dips on this recent pullback from mid-August. I don't think it was all that important. And energy could be a different story.
Global Advisors Managing Director Mark Ninton, one of the best technicians in the business.
I think it proves short-lived. We likely hold 4,000 rebounds in the second half of the year, so I stand by that.
I think we all know that supply is never going to be able to meet demand truly. So warmly welcome you to our FSInsight Technical Analysis webinar. This is your time. fine. Let's talk about Bitcoin a little bit. I know that many have an interest in this area, and I would just say that this largely is going to be the same trade as equities, but with more volatility. And if you're an equity bull, then you should be a Bitcoin bull, because this is going to move up faster off the lows. I think that near term, this has got some work to do. That it did, turn down on bigger volume back on the 26th. That broke, this entire little area of weekly consolidation. It also broke the uptrend from June 19th. So to my eye, it looks like we have one final pullback, which should get down under 19,550 and likely get down to maybe 18.9 to 19.1. And that should be a great time to position long in Bitcoin. I do think this is just going to prove to be a three-wave decline, and then we start to turn up. Ethereum, of course, ahead of its the upcoming merge, has been a little bit stronger of late, but both of these have sold off really since the middle part of August. Also, just goes to show that you always have to really keep these larger cycles in mind. And we retraced 50%. It bounced a little bit. I'm not certain we can say just yet that this is bottomed. In an ideal world, this would peak and really pull back down to 1328. I'm not sure if we get there. If we start to strengthen and get up above 1721, that's going to really set its sights on 2040, and above that, there's really not much until 2400. Let's just look at the ratio of Ethereum to Bitcoin. This gives us a lot of clues. This really showed us exactly when the real acceleration happened, and just really the break initially back in mid-July above these prior peaks happened. Volume expanded. Now it's broken an entire downtrend from last December. That's a very good sign for the ratio. And for those that are looking to what to favor, you would still favor Ethereum over Bitcoin. It hasn't shown us much sign that it's not going to work. let's start looking at some DeMark and what that says, and specifically a couple of these ratios, which I feel are really, really important. XLK versus XLE. This is one that not a lot of people chart. This gave an exact buy for, technology after having been under pressure. Look how weak tech was throughout the whole first part of the year versus energy. Energy was a huge overweight. Tech took charge. We got a couple of 13s, sequential and combo, exhaustion, 13 signals. We had a big bounce. Now we pull back. Now we've got a 9 count above TDST. That's actually a pretty bullish signal for tech versus energy. So energy rolling over, we see crude. If anything, I think it's going to be right to buy tech here, even if it's short-lived. I think, of course, it does depend on yields rolling over. That might not materialize truly until October, but I think we're going to see a bounce in this pair. And, when I look at just on a weekly basis, we got a really good 13 buy signal on a weekly basis for the first time in nearly 2 years. So energy, really since the latter part of 2020, had been outperforming technology. And that's big cap tech, that's XLK. That turned, and that really, we saw a nice little bounce in XLK versus XLE, and now we started to pull back again. So you note that this is on a 12 count now per sequential. The combo already signal. It wouldn't take much over the next couple months on any sort of pullback to really register another TD 13 signal, which would be a sequential buy signal, which would happen if you intersect that bar 8 on a close. So I'm watching this really, really carefully like a hawk. If technology gets a buy versus energy starts to turn up, that's going to be a really interesting sector signal to pay attention to. Otherwise we see right now the Qs today have got an official TD buy setup based on this week that has been perfected. That's a good sign, and markets are stabilizing a little bit. So I think we're going to bottom in the short term. So I'm going against a lot of people out there that think we're going to retest lows right away. I think we are going to have a bounce, and if anything, it's going to pay to really buy into that. Here's the weekly SPYs. We do see that back in November, this signaled 2 perfect TD13 signals right at the peak, and it's since started to obviously we rolled over. This was non-existent, and any sort of count that we saw up until August was erased after the severity of the recent downdraft, and so that's interesting there. Finally, I'm just going to follow up with let's take a look at technology real quick as a sector, only because this will probably be one of the most important things to hone in on. And you just see tech relative to the S&P, which had been trending up for years and years and years, broke down early this year. That was our big sell signal for the market. And, this has now since rallied and tried to retest this trend. For those that use traditional technicals, when a trend line is touched and repelled, oftentimes that's a negative. Now we're pulling back a little bit. So, it's going to take some time for technology, but when this uptrend line is finally regained again, that's going to be, a pretty decent signal that I think is going to pay to, pay close attention to. Outside that, let's take a look at healthcare. For those that have not been following my daily work, I reported on this when we started to break down, because healthcare was one of my top sectors for the year, besides technology, besides energy and materials. And we see that this sector, for the first time since last November, had a very serious breakdown back in the early part of August. And this is relative to the S&P. So that's definitely a headwind for the S&P. Healthcare is the second to third largest sector besides financials. Tech, of course, still being number one. So when you see tech or healthcare come under pressure like this, it is a problem. I think that if the market can bounce a little bit in the next couple of weeks, I think that'll probably be biotech driven. And then if we have a sell-off, pharma likely can hold its weight again. But we need to see the medical device stocks starting to come back a little bit. And for right now, those are still under pressure and causing some issues. So, look, I hope that was helpful for you. That's been 1 hour and 3 minutes, or right around an hour outside the intro. So thank you as always for your support, and appreciate you showing up. Have a safe, healthy, happy rest of your summertime officially, and great Labor Day period for those that are celebrating. And the official end of summer, of course, is not to the fall equinox, so we have a few weeks left, but I'll be back next month. So thanks. As always, get on there and vote your suggestions, and I'll be talking about those as we go along. But please share your thoughts. Write emails to inquiry@fsinsight.com. That's inquiry@fsinsight.com. Share your opinion, what you like, what you don't like. Happy to hear it all. This is your hour, and I like to be able to give you some insight as to how I look at the world and looking at stocks and doing some basic rudimentary analysis. And I hope that's helpful. So thank you, everybody, and have a wonderful